Hey folks, welcome to another weekly challenge update. And things did not go so well last week. I was expecting Alphabet to finish between 97 and 103, but instead it ended the week at 92.80, which is down here. So the stock has not only dropped down quite a bit from the previous week, but it also broke through this pink horizontal channel that it's been trading in over the last few weeks. So if I look at the weekly chart, you can see this was a massive red candle last week. So since I sold a couple of shorts, one at 97 and one at $95, both of those got filled because the stock ended below these two strike prices. And of course, what that means is I have to pick up 200 shares. I have to use some margin in order to buy those shares. And now I'm sitting at a total of 500 shares of Alphabet. The stock finished at 92.83, and I have a massive unrealized loss of 3,085 because when I bought those shares at the end of last week, I basically had to take an immediate unrealized loss because even though the stock was trading at 92, I had to buy it at 95 and 97. So my total return so far for this challenge is now back down to minus 605. So you can see I was pretty good last week, but then this week dropped all the way down by almost $3,700 in a single week, and my annualized ROI down to -8. Now that's still better than what the stock has done over this time, but if the stock continues to drop, then my ROI will continue to be more and more negative. But there's a couple of silver linings for this week here. First of all, the stock has broken out of this trend previously, like this red candle here, but then the next week there was this huge green candle that basically put the stock back into this channel. So something like that could happen again. The other good thing is because we have a lot of uncertainty coming up this week, IV is going to be really high, like over 50%, whereas normally the implied volatility for Alphabet is around, you can see here, 30 or 40%. So the higher the IV, the more premiums you can potentially make. And finally, we are quite extended from this blue line, the 21 moving average. And whenever that happened in the past, like over here, the stock tries to converge with the blue line again. Also over here, we went up to try to converge with the blue line. So even if we get like a massive sell-off again this week, I think for the next few weeks, we should see a consolidation again. Now going back to the daily chart, the last thing I'll just point out is this is like 1, 2, 3, 4, 5, 6, 7 red days in a row. Even though these two over here are green, this one closed lower than the day before, and this one also closed lower than the day before. So those are technically down days. Usually when you have a string of down days like this, or 7 or 8 days, you do tend to get a pop-up because the stock would be considered overextended on the downside, so it's oversold. So from a technical standpoint, I would expect the stock to have a higher chance of moving up this week, contrary to last week where I said it was more likely for the stock to move down. So I'm going to move this blue line over here to Friday, which is the end of this week. Today's a Monday. And I pretty much want to do the same thing as last week, just have maybe a call and a couple of puts. I'll put my call at $99 because that's my now new average cost. So the stock doesn't even have to go up by that much for me to break even in terms of my purchasing price. And then on the put side, I want to be below this gap over here because there is a chance either today or tomorrow or sometime this week, the stock is going to fill this gap and just basically very quickly go down to this $88 level. So I don't want to risk buying the stock when it's above this gap. So I'm going to move my put option down here below to maybe 87. I think also 87 is roughly where the long-term support line is. Right, so if I go back to the weekly chart and turn on the log graph, okay, if I zoom out here, if you remember from many weeks ago when I mentioned this blue line, where every time on the weekly chart where the stock ended the week on the blue line, like back here in 2008, and it only did that a few times over here in 2020, where the bottom of this red candle is. And then the next week it closed higher, so that green candle doesn't count. And then finally, just like a couple months ago, this was in October, came down again, ended the week on the blue line before having this massive rebound the next week. So if this blue line continues to hold as support, which it's been doing since Alphabet went public, then the lowest I would expect this candle, which is this week, to close at is around $88 here. So that's why I think like around $88 or $87 is a good price to sell my put option at. So if it closes anything above 87, then I'll just keep the premiums, but I don't have to buy the stock. And if it goes below that, then that's going to be pretty bearish because the stock has pretty much never gone below this blue line before. So this gives me a wide range here between 87 and between $99 and 87 that if the stock were to close between these two price targets, then I would just keep whatever premium that I collected this week, and I would not have to sell any of my current stocks or buy any new shares. What I'm also going to do though, because IV is pretty high this week, is I'm going to take advantage of that and sell a put spread, but I'll be pretty conservative, so I might go to like around $81 or $82 for the strike. So let's take a look at the option chain, and I'm going to sell 87 put and around 99 call, and let's see what premiums I can get with those strike prices. So this is looking at Google's option chain for December 16th, expiring in 4 days. You can see the IV is at 52.3, so that is quite high. I will do my put option first. So 87 is here. That's pretty good premiums. I can make about 50 cents or $50 just for selling one 87 contract. So 87 is here. If I draw a line that matches the closing prices of the last 4 days, let's say, you can see that if this trend continues, the stock will probably end just above 87, just below $88. So this $87 would technically be safe, assuming this trend continues. The other thing I like about 87 is because it'll take my average cost down even lower to $97 per share. So down by a couple of dollars, not insignificant. So I'll sell this 87 put. Looks like the price has gone down a little bit. I'm going to try to get 49, but I'll probably end up getting it at 48. Just one quantity. After submitting that, I will go onto this call side and look at the 99 call. Okay, so 99 is my average cost. So if I can get rid of all of my 500 shares at $99, then I would break even, and I would be pretty happy with that. So let's sell 99, and I'll try to get 23, which is the ask. And I'm going to try to sell all of my shares, all 500, because I think if we do see a rebound and the stock goes up all the way here, then I would be comfortable getting out of like all my position and start at zero, because at that point my overall gains would be back at, it looks like the put option just filled at 49. So if I sell 500 shares, all my shares at $99, then I should be back at this yellow line, which I haven't been in quite a long time. So I'm okay with that. Now, there's not a huge chance that's going to happen. You can see the delta here is 0.1. So there's a 10% chance that Google will end the week at $99 or above there. So I can make about 20, yeah, it's about 22 or 23 cents here per contract, and I'm going to have 5. So that's about $100. Okay, so that's submitted. And finally, like I mentioned, while that's waiting to get filled, I want to sell a put spread, but fairly conservative, fairly low, so that there is a very small chance it could happen. And I think around the $82 price point would be a fairly safe bet. One reason is because we had this channel here that the stock was trading in, and often when a stock breaks the channel, it will double the range of that channel. So if I draw this down to twice as long, you can see that it's going to be about right here, which is what happened last time it fell. It fell to about $83 before bouncing. It's about twice the original range of this channel. So if something happens again this time, then I would expect something similar to happen. The other reason is because the low for this year for Alphabet is around 83. I don't think the economy and the company itself and macro conditions are worse off now than they were back in October. So there's no compelling reason right now why the stock would crash through the previous low and continue to move lower.
Order filled.
Okay, and it looks like Alphabet's call option, those 5 calls got filled at 23, so that's good. So if I look over into the option chain again, you can see 82, I can get about 8 or 9 cents. And then maybe I'll go to like at 79 here. So that's a $3 spread. And I'm going to choose the mid price here, which is -5, and increase the quantity to maybe 10. Okay, and I'll submit that. Okay, and I'll just drop this down to 4 cents, so it'll get filled.
Order filled.
So this is pretty much what I've done this week. Sell an 87 put at 49, sell 5 99 calls at 23 each. And then my bull put spread here is $4 each. So that's going to be a total of 40,204 minus commissions, which is 196 US or 269 Canadian. So I've technically made more than $5,000 in premiums. Now this can go down a lot if we see like a black swan event and Alphabet drops to below $82, because then what I'll have to do is close my put spread here. So the maximum I can lose on this put spread, because I have 10 pairs of this spread, is $300, because 82 minus 79 times 100 and then times 10, so that's $3,000 minus 40. But let's just say it's $3,000, so I could lose quite a lot of money here if Alphabet goes down a lot. Now, hopefully that won't happen. In fact, there is only a 3.7% chance. Actually, to lose $3,000, Alphabet has to go below 79, so there's less than a 2% chance of that happening this week. But it is a risk that I have to keep in mind, and I wouldn't be doing it if the IV wasn't so high this week. So I think, in other words, I think the $40 that I'm collecting is worth the risk. Okay, so hopefully Alphabet is going to end the week somewhere between 99 and 87, which is most likely going to be the case. However, if it falls below 87, then I will pick up another 100 shares. And for some reason, if it falls below 82, then I will close my put spread position and take a loss on my options for this week. But like I mentioned, I do think there's more upside potential this week than downside, so we'll have to see. So thanks for tuning in. We'll see what happens by the end of this week, and I'll talk to you in the next one.